about with trading, or even when you come into here, is, you know, when you think about trading, really kind of dumb things down into, rather than having like 1,000 pieces of information where you're just slowly compiling it, think of trading as really no different than having a cookbook. Anybody ever bake a cake or bake anything? Right, when you have a recipe for something, it's very, very specific, right? It's always like 2 pinches of this, right? 1 pound of flour, put your oven here, and it's very, very specific down to the detail. And if you miss one thing, right, your cake is not cake anymore. It's disgusting. And trading is the same way. If you're missing even the smallest piece of information, and it's not in the proper order, your trade is busted. So how do you go? Now you got all this stuff, all these speakers, right? You got a lot of different things that you're going. So you got to really dumb things down into a very specific recipe. So go in, when you look into trade, first narrow down, like, what kind of style of trading do you want to do? Right? Is it day trading, swing trading, stocks, futures, options? It's all different. And then you want to dumb it down into that recipe. Now, you can get the recipe from somebody else, but you're still going to have to learn it. You're going to have to memorize it. You have to do it for a long time. And then over time, what happens? You bake that cake 50, 60, 100 times. Well, then you start kind of putting your own twist on it, right? You start thinking, I like a little more cinnamon than sugar, right? I don't like it overcooked, I like it undercooked. Well, now all of a sudden, you're a chef. But that happens over time. You got to take the recipe, and you got to kind of just do it over and over and over until it becomes yours. And now you're the expert, right? It's almost like you invented cakes, but you didn't, you know. And that's how this kind of trading's going. So I won't bore you with my resume, because in the end, traders are all the same, right? We went to school, we were told and sold, go to school, get good grades, work till you're 65, have 2 cars, blah, 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 blah. 2 kids, 2 cars, 2 dogs, take 2 vacations a year, 1 Disney World, 1 to go see your parents. Right? And in the end, what do? We work in cubicles, we try this stuff, we go to conferences, and we kind of just grind things out. But think about always, recipe, recipe, recipe. If you can get that down, you're going to really make some money. So, I'm going to talk to you a little bit about what I do. So, I'm going to give you one very, very specific technique. Now, I'm going to give you the recipe for it. And so when you guys go back on Monday, what you're going to do is literally walk down that line and try it. So now I have all different types of strategies that I use. But this specific strategy, I use it every single day for at least 10 years. When I started using this strategy, I had literally hair like Bradley Cooper. Here I am, right? So I'm going to tell you a little bit about momentum and why I like trading momentum. So in terms of trading strategies, there's all different types of stuff. But as retail traders, which is what we are, right? People are trading less than millions of dollars. Trading stocks that have the most momentum is the easiest and quickest way to make money consistently, because if you have $10,000 or $20,000, right, making 10 cents on General Electric is not going to do you any good. Right? Trading Bank of America or some other grandpa stock, it's not going to do you any good, because all your account's going to do is go from 10,000 to 10,200, right, over the course of a year or whatever it might be. So we need to be in the business of trading momentum stocks. So in trading, you're only as good as the stocks you trade. So you have to always be in the right stocks. Now there's 8,000 stocks. How the heck do you figure out what stocks to trade? So there's softwares and things that you can do, like use Trade Ideas, TC2000, FinViz, so on and so forth. There's a million of them out there. So pick one. They're all the same damn thing, right? Pick one. They're all the same damn thing. So how I look for momentum. So we learn technical analysis. So most of the people here, they're all using technical analysis, which is the study of chart patterns, all right? Well, chart patterns is just one thing. So if you draw some squiggly line on a damn chart, doesn't mean you're going to make a bunch of money, right? How does that squiggly line on a chart, how does one stock go up 2%, and how does another one go up 20% or 30% or 50%. Well, it's not just technical analysis, right? There has to be some type of story that's attached to it. So when you apply technical analysis with finding some type of catalyst, some type of news out in the market, now what you're doing is you're marrying fundamentals with technicals. And that's how you can find the stocks that all of a sudden go up 20%, 30%, 40% or more, right? And so when you combine those, now you have something that can be really special. But the other part and why it's important to trade stocks with catalysts, something that has a story out, something that's in play, is that when you're new, you have enough stuff going on, right? Understanding a chart pattern is one thing, but then you're always like, yeah, but the market's going up, the market's going down, like what do I do, right? I've got this stock I want to buy, but the market's going down that day. What do I do, right? Or hey, I like this stock, but the market's up too much. Maybe it's going to go back down, right? You're always thinking about this, and so now you have this kind of paralysis by analysis because you're playing two different things. You have the stock, then you have the damn market. And it's hard to marry those things. But when you trade stocks that have a catalyst out, some type of fresh news. What I mean by fresh news is earnings or some type of press release. Press release could be anything, right? I have a new drug contract out, new government contract, doesn't really matter, right? Or some type of earnings. That doesn't matter either. You know, we'll dig into that. But when you trade stocks that have that type of news out, they're going to move independent to what's happening in the market. So whether the market is up or down, you'll have independent order flow in this particular stock that ignores the market. So, you know, market's down 200 points. This stock had news out, right? It's operating on its own playing field. And so that's why when you're new, trying to find stocks that have this is going to take out half of that confusion of trying to analyze the market while also analyzing the stock. But also you'll get those bigger gains. So in terms of trading, there's 3 stages to the trading day. So you guys are learning patterns, right? You get pullback patterns, breakout patterns. That's what people talk about. What most people miss is that the patterns that you do at the open, which is the first hour of the trading day, they won't work in the midday. So you may be reading some book and you say, wow, this person trades flag patterns. Sweet, easy enough, right? But if you try that pattern at noon, that pattern's going to have a higher probability of failure. Quick momentum patterns work in the first hour. But if you try that pattern later, it's no good. So understanding, there's 3 stages. So your first hour is your open. That's where the market is about price discovery and price volatility. At the open is where you see the big spikes. It's also the wildest time. A lot of professional traders don't like trading that first 30 minutes. They're scared. No, I'm just kidding. But if you can apply some type of structure to that open, then maybe all you need to trade if you can get good enough at it. So the open is fun. That's where I like to do my focusing. The middle of the day is like your 10:30 to 2 p.m. All right? During this phase of the day is about retracement and consolidation. That's your slow period. All right? That's where stocks are going to sit around and marinate a little bit. You get a big spike up or down, some type of move at the open, well, it's got to rest. Stocks are like people, right? They run up a little too far, they've got to chill out. So that midday, you get that slower trading. Now, slower trading is not bad. A lot of my students, that's when they trade best because it's smoother. It's a little bit slower, it's a little bit steady. Not everybody's meant for the wild, wild west, right? Sometimes an easier trade can still be the best trade. So your middle of the day, you're going to have different patterns. It's going to be retracement patterns and consolidation patterns you trade. And then end of the day, you choose a side. So stock will break up or down one particular way. So just making a decision. So the patterns that you use there will be vastly different than the ones that you use at the open. So I'm going to teach you a couple that I use at the open because, frankly, I find that to be the funnest time of the day to trade. So, at the open, the first 2 hours, right, I use a pattern called the opening range breakout, which we'll go over. All All right, I use the opening range breakout and then one pullback pattern. Midday, I tend to use patterns that are more VWAP based or deeper pullback based. And then end of the day, we trade range breaks. So, the pattern I use at the open is ORB. So what we're looking for at the open, all right? I'm looking for a momentum stock that gaps up. For those of you guys that are not familiar with gaps, a gap is a move pre-market. A stock has a news out, all right? So I'm looking at any stock that is moving pre-market 3% or more on volume. So put in a filter, 50,000 shares. That'll get rid of all the junk. For those of you guys that do not have scanning software, there's a website, the stock market, write this down, thestockmarketwatch.com. If you go on there, there's a pre-market tab. If you hit the pre-market tab, you'll see all the stocks that are moving up or down. It's not perfect, it's not going to be as good as Trade Ideas, but it'll save you the $100 while you're brand new and you got to do something, right? Business, trading is a business, cost is everything still, right? So if you can save a little money, take the money. When you get good, start adding tools. I traded for years professionally with almost no tools. One good charting platform, your broker. How much do you need? A notepad, journal, and a pen, right? You can make your way. So I'm looking for some type of stock that gaps up in the morning. I only want clean daily charts. So I want daily charts that are gapping out, either to new highs, all-time highs, something that's coming out of some type of range. If you have a stock that gaps up, its daily chart is not clean, it's just going to run into resistance. It won't run free. All right? Trading is all about supply and demand. If you run into zones where price has been recently, which is the easiest way for you guys probably to think of resistance, it's just going to come back down. But if it's free, you look at that chart, just go back like a year or something, right? You don't have to dig too deep. And it's clear, right? You don't see anything in that area. That's something that can go. Look up the float on those. Anything under 100 million. So float is the number of shares outstanding is probably the easiest way to think about it, right? So it's just a supply thing. How many shares are running around in the market that could be bought up or sold? The lower the float, obviously, the more explosive it can be. Now, you don't want to go too micro flow because you start getting into a whole different territory of stocks. Tesla's a low float. Priceline's low float. A lot of the best companies, it could be a multi-billion-dollar company, it could still be low float and trade like a small cap stock. A lot of people assume that you have to trade $1, $2 stocks to make money. The float on a stock will tell you how explosive it can be. And there are a lot of big names, safe, easy, liquid companies that will move like a small cap stock. So go in, look at that daily chart. Check the flow, check the gap, see if there's any action for you. Out of all the stocks that show up, maybe you'll find 4 or 5 that you like. Do this for up or down. You got to remember that you can trade both ways. Now, how you want to trade this pattern? This is going to be really easy. I'll show you some charts. Now, it's easy in theory. The key is you have to let the chart set up the way I'm showing you. In trading, if you ever one-eye a pattern, right, where you're kind of like, oh, I think it's there, it's not there. It should hit you right in the face. This is clean, crisp. In trading, your chart patterns, they're like people, right? If it's a sloppy, right when you meet a person, you're a woman. You meet a guy with tattoos, some earrings. Good, you may one-eye and think, whoa, this is exciting. But you're going to get burned. He's got 4 girlfriends, right? You're looking for the guy in doctor's pants and a golf shirt in trading. That's the guy you can trust, right? That's a guy he's not cheating on you, right? He's got nothing going on. We want that guy, all right? So we want clean, crisp patterns. If a chart is clean when you're looking at it, if it has moved in a predictable and easy way, how is it going to treat you once you're in it? In the same manner. But if you're looking at that chart and it's all over the place, well, what's going to happen when you buy it? It's going to be all over the place too. You can't control it. You can't manage it or corral it. So now you're faced with risk and losses. So we want that easy trade. We want smooth, tight patterns. Always ask yourself when you take the trade, if it ain't tight, it ain't right. So we want really, really tight patterns. So what we're looking for, right? So this is IQ. So this has been a stock that's been in play for the last month, right? So it had some type of news or sector momentum out, and it gets going. So what do you guys notice here at the open? See this thing right here? This space. That's a gap, right? So we're scanning for those gaps in the morning. Now when the gap comes, we need to see three consolidation bars. You can buy in the third one. It's called an opening range breakout, right? So you get a gap. I need to see a minimum of 3. So it could be 5, it could be 6.
Is that 1 minute or 5 minutes?
I use 5-minute charts, by the way, guys. 1-minute charts, I know some people use them. It's not as sexy as it looks. 1-minute charts will make you overtrade. 1-minute charts will make you think there's patterns that don't exist. 1-minute charts are for scalpers, and not even good scalpers. You will see on a 1-minute chart so much random stuff, it make you overtrade like no other. When I was using 1-minute charts, I look at my broker's statement at the end of the day, and I spent $1,000 in commissions. I think you saw patterns everywhere, right? It doesn't work like that. A 5-minute chart or even longer, it'll smooth things out for you guys. You'll take less trades, but you'll get bigger percentage moves. As retail traders, you can't be in the game of taking 10 cents, 20 cents here and there all day. We need bigger chunk plays. That's how you grow your account, limit your commissions and taxes over the year, and over 2 years it really adds up. So get away from those 1-minute charts. It's going to make you overtrade. So what we want to see, the gap up, 1 candle, 2 candle, 3 candle. Once that range breaks, you can take the trade. Put a stop loss. That's how you manage your risk at the bottom of that range. Okay? If the range is too big or it's loose, it's looking all over the place, that's when you stay away from. Don't force the pattern. You may have 5 or 6 on them and only 1 triggers the way you like it. That's okay. Once it goes, this type of trade, you may have 20, 30 cents risk, but you can net dollars, right, if you're choosing the right one. So it doesn't matter. You only need 1 good trade in a day to make money. Think about this, and this is why you don't always need small cap stocks. You have a small account, this is a $30 stock. You buy 300 shares of it. It rips $2, $3. How much money you made? You had a decent day. You don't necessarily have to have thousands of shares of something. Right? Everybody always wants more shares, but guess what? It's easier to trade a stock that's a little bit higher in price because it's going to give you range that you can trade around in it where you don't have to be perfect to the penny. See, when you have a 5,000 shares of a $2 stock, you got to have that thing damn near nailed down to the penny, right? Because it goes down a couple pennies, you got 5,000 shares, you're out $100, you're already like, oh shit, right? You're already freaking out. The thing hasn't even moved. The thing hasn't even moved. You have a $30 stock, you have 200 shares of it, it goes down 50 cents, you still might be in the trade, but you're only down $100. We're waiting for that rip. And then what happens is you can trade around it, right? There's more room for error. There's not as much range in those $1 stocks as you think. Sure, every day there's one random one that explodes. But for the most part, all of them just sit around. There's no range. And so it's going to be easier and it's going to save you a lot of commissions. Trade a normal size stock. Momentum is momentum. We always want to look for what's the easiest to trade. So this is Etsy. So this is a trade I took the other day. Same type of deal. So who knows what these guys do. You can see the chart on the gap. See how there's nothing here? It's breaking out, right? This thing is actually probably breaking out to all-time high. So you get the gap at the open. 1 candle, 2 candle. On the third one buy, set your stop right under. Okay? Set the $40 stop. If it runs $2, $3, you're good to go. Now this is the thing. This is called opening range breakout. So how long are you going to hold this thing? Don't marry the thing. You're not holding it for days. It's called opening range breakout. Remember, there's 3 stages to the day. So we're only holding these usually for the open. Right after the first hour, sure, if it keeps going, great. If it doesn't, no problem. We wait for our midday setups to re-enter them. So don't marry these things. This is meant to be a quick trade. You know, most of the trades I do at this stage of the day, I might only hold them for 20, 30 minutes before I'm already starting to scale out of them. Now for me, once I'm covering my risk times a few, I'll look to start looking to sell out. I don't necessarily sell out. I'll wait for a sign that says I have to get out. But I want to start looking at taking some profits, and then usually I'll put my stop at the buy price and I'll see what happens. If it keeps going, it keeps going. But always kind of scale out of these things. You know, when you're new, you're going to build your account. You're going to build this $100 at a time, $200 at a time. So just keep taking those profits. Over the course of a month, 2 months, you will start to build them out. So this is ZS. This is a trade I took a week ago. So this stock gapped up, once again, I don't care what type of news it is, right? It shows up on the gap scan, and I'm just looking for a straight one. So see something like this? Gap up, one candle, third candle, it starts to break its range. So that's a $37. So it runs at 42 and change, right? At the open. Notice how it rolls over, and it starts to consolidate the rest of the day. You've got to whip out and take those profits. Now, taking profits is a little bit more art than science. When you're trading the open, it's volatility. Sometimes they spike up, then it may just come back down. So you want to keep taking those profits again. It's meant to be a quick trade. Most of the time, 20 minutes, 30 minutes, and it's out. But that's what's awesome. Now, you can do these things to the downside. So Facebook has some news out. So gaps down in this news, Zuckerberg's under all sorts of heat. Gap down. So notice it's just a consolidation range at the open. That's all you're looking for. Minimum 3 candles, but could be longer. When that consolidation range breaks, you're going to take the short, put a stop over the base. Easy enough. Ride those things down. Now, just rule of thumb, once you get kind of 2 to 1, 3 to 1. So if your stop loss is 20 cents away, you're up 60 cents, 80 cents, start looking to take some off the table. Even if it's a third, just keep paying yourself. I'm Indian, right? If we're not paying ourselves, we're very, very ornery. Right? So I got to always be paying myself, right? Money in the pocket. So now that's one way to get into a stock at the open. So that's buying on strength. Well, there's 2 ways to buy a stock, isn't there? One is on strength. The other one is on weakness, right? So you want to map out your trading day. So, okay, I've got a stock that I like that gaps up. Now, what do? I can buy it on strength if I see opening range breakout. Well, what if it doesn't show opening range breakout? Well, I want to be looking to buy that same stock on potential weakness. So I'm giving myself 2 options. If I see this, I do this. If I don't see it, then I'm going to be buying it on the pullback. So on my intraday chart, put this down. So as that candle's holding, buy it and put a stop under that low. So now you've got 2 options. Gap up, ORB. If it doesn't do ORB, wait for the quick pullback to that 9 EMA. If it doesn't do either, you leave it alone. But now you've got 2 options. So if you got something you like, you're almost certainly going to get one of those show up. The key is to let it show up. No pattern, no trade. No glove, no love. Unless you're in a committed relationship. New. So this is a hot little IPO that comes out. So check this out. So you get the gap up. So I'm looking 2 things. If it gaps up, I want that ORB, that consolidation at the top, right? If it doesn't do it, okay, no problem. I wait till it hits the 9 EMA. See how you tap right into this thing? I get a green candle to hold. Now I know it's stopped. I've got a way to manage my risk. That green candle hold, I can get in, buy, set your stop under that low, and now you're into this thing. Look at the range on this bad boy. 21, 30 bucks in a couple days. Doesn't have to be a small cap stock. It trades like a small cap. You buy a few hundred shares, and you can make money. And if you got a bigger account, right, you can make as much as you want. Now you can do this same type of thing to the downside. So when they gap down, same type of thing. Look for an ORB. If it doesn't, wait till the pullback to the 9 EMA. So like in this particular one, see what happens. You run into the 9 EMA, you get a red candle to hold. So that's on the short side. And it just blows right through it. So the trade doesn't work, but you can get out with a very, very small loss. That's what always it's about. If it works, it works. If it doesn't, you're going to get out with a small loss. You move on to the next one. But that's how you got to always keep churning these things. Right? If it works, it works. If it don't, it don't. Get out. Now, how do you tie all this together? How do you tie all this together? So you're brand new. You've got a couple patterns that work. And guys, just come with me. I've got, 1,000 of these kind of charts laying around a folder somewhere. All right? So you're brand new. How do you tie all this together? Number one, if you want to be good, I always think about this, like, what is my perfect day? So in trading, you can't really count your money yet, right? When you have money, it's really just a system of things that you have to do every day, right? So if I wanted to make $1 million in a year, how do you get there? Well, for me, I think of what my perfect day would be like. What are the things that I have to do every damn day to lead up to that $1 million? Right? You can't control outcomes, but you can control your process. You can control your preparation. You can control all the little things that you do every single day and work it backwards so that you end up where you want to go. So the first thing is you need a list of go-to setups. Go-to setups. So what's a go-to setup? So an ORB, that's my go-to setup. That quick pullback buy is one of my go-to setups. So I have 18 patterns I like to trade. Now you guys, that's a little bit too many, right? Narrow it down. I need 3 or 4 patterns that I can trade in any market. But I need to know the recipe for them. I have to know down to the microscopic detail every single little thing about that pattern. If you don't know it, if you can't break it down into the minute details, you don't know how to trade that pattern. You're just a bank and ask for $1 million loan to open a restaurant without a business plan, would you? So you're trading, you're the CEO of your own small business. Now you're trying to get into a bigger business. So why wouldn't you have a damn business plan? If you come to me, ask me for help, I say, let me see your business plan. You don't have one. You're not even in the game yet. I got a business plan. I've been trading my whole damn life. I still be working on that thing. So you have a business plan. Down to microscopic detail, everything you're going to do about your trading. And keep honing it. Put your setups in there. Put pictures of charts, hundreds of charts, so that you can start to visualize what the perfect pattern for this play looks like. So you're not taking a guess. It either looks like this or done. I'm out. Easy enough, right? Routines. How and when do you find stocks? What do you do in the morning? Going to be very, very important. So in trading, why it's so tough? You have literally dozens of variables you have to compute at any given time in the market before you make a decision. Dozens. So we're not computers. So how do we compute dozens of variables? That seems like a lot. Well, we have to dumb everything we do down to routines. Set things that we do every single day that take the thinking out of the day. Right? What do you do when you wake up? You should have a process for it. Right? How do you find your stocks? What scans do you run? What time do you do all this stuff? List it down and then keep working on that routine. Refine it. It'll take a lot of the thinking out of the day. Collecting and analyzing data. This is going to be one of the most important things you do. If you come to me and say, man, I'm having trouble trading, Canal, what do I do? And I say, let me see your trade journal. Or I'm going to ask you some questions. What's your win percentage? What's your average reward to risk ratio? How do you trade when the market's up versus down? And you don't have that data. How can I help you? This is what usually happens when one of my students calls me. Hey, I'm having a little trouble trading. What's going on? You know, I'm just not winning. Just over trading. I'm just not confident. How am I supposed to help you? How can I fix that, right? Over the phone or on a Skype. How can I get in and fix that? But if you get your journal and you say, man, I took these 100 trades, and this is what happened. I can tell you in 5 minutes how to fix your trading. 5 minutes, I can fix it. If you have that data. So that data is going to be huge, but the data is going to do something more. It's going to give you the confidence, because you're going to know what you do right and what you do wrong. So if you look at your data and you say, man, I got a 72% win rate on this pattern. Hey, now we know what works for you. Oh man, I'm really having trouble with these ones. Sometimes in trading, it's just about eliminating things that you're really bad at and focusing on the good. So the data is going to really dumb this down for you again. But most importantly, it's going to give you a lot of confidence. When you go into a trade and you see that opening range breakout pattern, you're like, man, this thing is looking zesty. And you know from your data that you win on it 68% of the time. Are you going to be afraid to pull the trigger? You're going to be afraid to put your hard-earned money, that money you can be using for your kids' tuitions, your mortgage, your cars. That's a lot, right? It's a lot of damn pressure. But if you don't have the data, you won't have the confidence. But you know what? You never worry about taking a trade. When you know statistically you win 70% of the time, it's actually costing you money not to take the trade. So the data will give you that confidence. It's going to give you that swagger to get in there and really act like you know how you're doing. And you can build that data even on the simulator. So take notes, analyze everything. I use a website, traderview.com. Anybody use it? It's pretty good. You just upload all your stuff to it. Hooks right to your broker. You get in there, upload it. It computes all your stats for you. You want to know how you trade in the morning versus afternoon? It'll tell you. You want to know how you trade certain price stocks, low price, high price. It'll tell you. So now you're going to have all this data for everything. I have data on over 100,000 trades. There's nothing about trading somebody can ask me I can't give you the data for. That's power right there. That's money in the bank. That data is everything. Indian people, we like data. But for you guys, you got to like the data too. You don't got to use a spreadsheet. Know your personal patterns. This is huge. Knowing your personal patterns. As much as we trade chart patterns, we have personal patterns that impact what we do and how we behave. Anybody eat when they're stressed? Yeah. Anybody ever smoke any cigarettes when they're stressed? Do a little drinking when you're stressed? In your trading, same type of stuff happens. We have personal patterns that show up in our trading that also impact us in our lives, and they kind of all intermix. So we have to know our personal patterns. For me, I had a pattern in 2011 that lasted a whole damn year. I always trade the open, and I'm really good at it. But what was happening in 2011, if I lost on my first trade of the day, I almost always got smoked out that day. So I'd win 4 days. But then if I lost on that first trade of the day, my next trade was a disaster because I was reaching. I'd be like, man, I can't believe I lost. Then my next trade would be a little bit of a disaster. I'd reach a little bit more. And all of a sudden, my whole week went to shit. Because I'd lose a bunch of money on that day, they kind of X'd out all my good days. That was a personal pattern that I had to break. It was a habit, which is easy to break. Once you know it, you can put in a plan to actually get through it, right? And for me, it was just about understanding, right, the data that, hey, I win X amount of time. If I lose one trade, all that means the next one is probably going to be a winner, as long as I'm doing the right thing. But I can't let it spiral out of control, right? If you fight with your spouse, sometimes that can impact your trading. I have a student I work with, he trades good all the time. He just had a new baby, and we tracked it down. Almost any time he sleeps less than 6 hours, he's got baby stuff, baby mama drama, whatever, he loses. So we have to put in a rule in place because it was going on for months. If you sleep less than 6 hours in a night, no trading for you. Why not? Right? It's 1 or 2 days a week, so what? Spend time with your kid, do something else. Because you're just going to lose. But once we eliminated that one thing, his trading results started to skyrocket. So we've got to know our personal patterns. Keep a journal. Write things down. How are you feeling on these trades? What's going on? What'd you eat? What'd you sleep? Right? The more you know, the more you can get going faster. Visualization. Right? You've got to be thinking about these chart patterns all damn day. I'm in the shower and I'm thinking about opening range breakouts. I'm making some whoopee, I'm thinking about opening range breakouts. I'm thinking about opening range breakouts all the time, no matter what. Right? You want to be picturing out your day. Right? I have to always visualize like how I handle losing, because I don't react well to losing. Things can really spiral out of control if I start taking losses. I've got to literally visualize, okay, I take a big loss on a trade. What am I going to do? Right? I have to have a game plan for it. So start visualizing that stuff and building that winning mindset. So just remember this, guys. Confidence. When you're new, you have almost no confidence in your trading, right? It's scary. Your confidence comes from your preparation. When you prepare hard, there's nothing that you're going to see in the market that's going to surprise you. See, the actual market is the easy part. The real work, the nitty-gritty, the stuff that makes you money is happening way before the market opens. That's coming in from your homework, your preparation. You should be looking at, I'm not even kidding, 1,000 stocks every night. Because you know what's going to happen at the end of the year? That's 200,000 charts you've looked at. After 5 years, you've looked at 1 million charts. That's expertise. That's really something right there. Imagine what you're doing. Some of you guys are in your 20s over here, right? Do that for a decade. You've looked at millions of charts. That's all going to be in your brain. There's nothing that you could see in the market that would surprise you, that can throw you off guard. But to get there, you've got to see chart after chart after chart. Get a tool like TC2000 where you can use spacebar and just flip through them. Over time, you'll be able to get through 1,000 charts in 30 minutes, maybe even 20. You can do it while you're doing whatever. But you just need to be seeing those charts, because when you're new and you're looking at your, say, 50th chart, and I'm looking at my 5 millionth, there's a big disconnect right there, right, on how we're identifying things. So you need to get through and just put in that work. That's part of the process that's going to build your confidence. Remember, you control your effort. It's easy when you're new, and even when you're old as a trader. You have a little win, you're on a little streak, life is good, your effort slows down. You always think, you've never made it in trading, right? The guys that are good, they're fighting like they don't even have $1 in their pocket. Because look, if you're trading against me and you want to be better than me, you'll have to rip out the title of the best from my damn lifeless hands. And that's after a lot of years. That's how you've got to go in and be on the attack. You are trading and competing against the smartest and the most crooked people in the history of the earth. That's what finance is. There are no honest people in finance. And so you've got to go in with the mentality to come in and attack it. How do you win against somebody that's smarter than you, that's more educated than you, that's got more money than you? Only by one thing, your preparation. That's how you can do it. That's how you even the playing field, is with your own damn effort. That's sweat equity. That's how you compete against the best. That's how you compete against billionaires when you've got thousandaires. You've got to go in and outwork these people. And if you can do that, now you're in the game. Trading is the hardest thing I've ever done, but it's the best thing I've ever done. Because in the end, when you make money, it's your own. When you make money, it's because of you. When you have a job, you can always blame the guy next to you, right? Bob the Bear in the cubicle fucked up my promotion. Right? He screwed up my project. My boss is a racist, right? I can't win with him. But in trading, it's awesome, but it's also depressing, because when you screw up, man, it's your own fault. You can't blame Bob the Bear. You can't blame your mommy or daddy issues at that point, right? And so when you lose, it hurts. Trading is almost always a form of just, I'm slightly depressed or more depressed. This is how it goes. But when you win, guys, It is no better feeling because it is your own, it's in your own pocket. It's worth learning at some point because you do have control over it. Just remember, it's going to be hard. 1,000 charts a day, that's the only way you compete, all right? Guys have fun.